Hey, good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Thursday, October 23rd. A bit of economic news releases today. We got the weekly jobless claims. So remember last week we had 266,000, which was a pretty big drop from where the range we've been at. And then forecast for this week brings us back into that range at 285. And we came in at 283. So not bad. We kept in within the range we've been seeing of late. Next on the list is the FHFA Home Price Index. We had a 4.6% year-over-year appreciation in the market, in the markets that they cover, and then it increased to 4.8. So that's the first time we've seen an increase for a while. It was kind of slowly decreasing, and we saw a little spike here in August. So nice little surprising news there. And then we got the market flash PMI. This is the manufacturing number, part of the manufacturing numbers that we look at for the month of October. So we had a 57.5 the last reading back in September, and October actually dropped to 56.2. So not so good numbers on the manufacturing side. Anything above 50 is still expansion. Anything below ends up being contraction. But something to obviously keep an eye on, see how that goes down the road here. Leading indicators for the month of September, we had a 0.2% and 0.8 jumped up to 0.8 in September. So good news right there. This gives us kind of a foresight into or insight as to where the economy is kind of moving, and that large number there, it kind of gives us a nice outlook of where things might be heading in terms for our recovery for the economy, or the pace of our economy going. So this is a nice good number here for us today. Stock market's up today. The Dow Jones is up over 200, and a lot of it is actually not only on the numbers we saw previously, but we on some earnings reports. But this is the one that's really been kind of the thing that hit the nail on the head. The better than expected manufacturing news out of Europe. So remember, we've been hearing all this negative news about China and Europe actually came in some good, much better than expected manufacturing numbers. And the concern is that they're going to slowly go into a recession. Some countries are in a recession over there per their numbers, but this came in better than expected, and it was a pleasant surprise to investors, and it kind of brightened up the day, so to speak. Let's take a look and see how this is affecting the interest rates. So we're down about 5 basis points, and so it's not really a change from yesterday. But if you look at over the course of the week, we've been having to drop a 3 and now 5 and some of that from earlier in the week. Yes, we are down from earlier in the week. But if you look at just from in terms of yesterday, no, we're not down. Okay, folks, but for the most part, we're very close as in terms of where we are in interest rates. You're talking like an 1/8 of a percent in changes here. Okay, you guys have a wonderful day. Thanks so much for watching, and we'll look forward to see you guys tomorrow.